See, it's a good team.
All right. Welcome back. Some technical difficulties. They got us on Tuesday, not a Monday like usual. But hey, we persevered. We're back. Bennett, how you doing over there?
I'm doing good. I think I have a gray hair or two from getting all this stuff up.
Nice. Yeah. Some audio troubles. My P&L came in about 20K in the last hour.
Okay.
Whatever.
Maybe the 20K is a little worse.
Fuck it.
I don't think that can hurt us anymore.
Yeah.
Then our little audio problem. Maybe. I don't know.
All right, should we jump into the market outlook?
I'll tell you though, after that pull-in, I'm dying to do this video right now. Definitely, this is number one on my priority list of things I want to be doing right now.
All right, so let's get into the market outlook.
Yeah, let's jump right in, huh? All right, market outlook. So we came into the week expecting a bounce after this S&P pulled in about 10, 11, 12% area. Pretty controlled pullback when it was all said and done. It kind of gave this little downtrending wedge on a very small time frame. So we walked in expecting a bounce this week. The only problem was we walked into a Monday morning gap up, and it kind of took the bounce away. So we saw some weakness end of day today. And so now from here, we're going to look at, this little mini gap being filled, and then we'll look for support here tomorrow. This 330, 332 area. I believe this is a very, very big inflection point in this area. Either we, come down here, we fail the retest, and we're just back at this 318 level, or we hold here and it's the next leg before, or it's the next pivot before next leg higher. So that's kind of what I'm thinking here. Bennett, what you thinking?
So you're going to pull up the...
What you thinking? Oh, I got it.
Pull, yeah. So, again, very short term, we've been in this little bit of a downtrend you were just explaining previously. I think broadly we have 320 in the SPY support, 340 is resistance. So like you mentioned, if we can kind of break out of this little downtrend, we maybe get that move to 340. If not, we want to be keeping an eye on that 320. So just short and simple. I think that's the main premise that I got for my market outlook. Yeah. If you want to jump in, we'll start with the member ideas.
Let's go.
All right. So we have Mr. Greg looking at Lulu through 326.
326. 326, huh? Oh, through today's high. Yeah, I mean, Lulu looks pretty good. It's just in a tricky spot. It's like a lot of these names. If you didn't buy that initial bounce, it's really far away from support. So, I mean, you kind of have to sneak an entry here, 326 versus maybe this last pivot low at 303 or something like that. But I mean, it looks good. It's bouncing. It was relatively strong today, so I'm not mad at that idea.
Next up is this BHVN through 64.
Oh, fuck yeah. I love this. Really tight consolidation at turning a previous resistance level to new support. 4 or 5 weeks of consolidation since earnings. That thing looks like it's going to explode through this little resistance area. Love that.
Yeah, I have a 64 buy stop in that one as well.
There you go.
And last up for Mr. Greg is the ZI recent IPO.
This is Zoom info, right? This is the fake Zoom.
Yeah, he wanted to buy. He might be in already. He was looking to buy the intraday high through 40, which triggered today. Okay. So he might actually be in.
Yeah, that makes sense through the inside day through 40. I see that with this little slow resistance area. I get it. Yeah, that looks pretty good. I mean, if he's in, he's in. That looks good.
All right. Now, before we jump to Joseph Park, if you're still watching us, drop us a little thumbs up if you find these videos any bit helpful. So we're going to jump into Mr. Park's question, Shake, and this is more geared towards you. He says, my question is, when is it good to use a low day stop? Looking at the pins breakdown video that Shake did, he went with a low day stop. My question is, how did he know to go low day stop rather than his stop under support?
So what I tried to explain very clearly in that video is that it was a pure breakout setup. So whereas a support buy, you're buying against the support level, and the stock can chop around. You could be in it for weeks at a time. Volume's not that important. I'm buying off of a support level. But for Pinterest, where it was, this 40 level, and we were buying it because of the high volume, taking out the resistance level. That's when I'm going to go low a day stop. And I need to see that volume sustain, and I need to see the stock close above that resistance level, or I'm very likely downsizing my position, or maybe even getting out in total. So the main difference there in that is that support buy is the more high probability buy. That's what we want you to focus on, because you have time on your side. Whereas a breakout setup like Pinterest, I need that to work that day, and it's a much lower probability setup, but you can get some tight risk and some good stock that way by being able to read volume. So it's all about the setup, breakout setup versus support buy. That's it.
Gotcha. Okay. So next we had a question by Tyler Kenny. Shake, I'll take this one. It's a little more geared toward my skill set. He says, for someone getting into finance or financial advisor, wealth management, etc., something in an area, what tests would someone first shoot for to pass in order to line them up the best for a job interview? This is kind of like where you need experience to get your entry-level job, but you need to get the entry level to get experience. This kind of falls a lot with finance. With any, series, Series 7, 63, 65, Series 6, any of those that you need to get, you cannot get without being sponsored by a firm, meaning that they've already hired you. So the main thing is really just getting your bachelor's degree, some type of focus or concentration, finance or business marketing, something in that regard. But regarding those series, like a Series 7 or 63 that'd be required to be an advisor, you wouldn't be able to get those until you're sponsored by that firm. So that's, it's kind of like a catch-22. So with that, Shake, if you want, we'll jump into some of the social media questions.
Let's do it.
All right. So let's see. We're going to start off with Chewy. Chewy up through 57.
Yeah, I like this. We got a bunch of members in this Chewy. I know Heaven's in it. This is like Heaven's stock right here. Up through that 57. Yeah, I mean, it closed weak today, so we'll see how things respond tomorrow. We got that debate tonight. It's going to be a huge catalyst for the market one way. But through that 57 area, it does definitely look good. I agree.
Okay. Now, we got quite a few Shakes. So if any of these are just strictly a pass, just say pass, because there's probably a good 20. So we're going to try to run through them.
Oh, man. Y'all got me today.
All right. So next is Workhorse, WKHS. Up through 28.
Nah, just the support's down at $20. I mean, if it flags out a few days and then gives you that breakout setup like Pinterest, then maybe. But you're just kind of buying it because you want to buy some electrical vehicle stock right now. Yeah. Keep it going.
Next one is DPHC. Same guy, similar chart setup.
How? What is it? What is it?
DPHC.
AC.
HC.
HC. DTHC. B. D? D as in Darren?
D as in Darren. P as in painter. H as in home. C as
P.
in C as in cat.
PHC.
Yeah.
Oh, my God. Oh, my God. Oh, there's another. These are these SPACs. No. I mean, pass. It's just supports down here at 1850. You're gonna risk like 50%.
Yeah.
So pass.
Okay, let's see. Okay, so we got MMC through 116.
Yeah, that one looks like it needs a little more time to set up, but by the time it does set up, it'll probably be good. It's kind of $2 away in this kind of stock. It's a slower mover, so I can see this one flagging out and then giving us that 116 entry in time. So that's not so bad. Let's keep it going. What we got?
Okay. Next we got Work through 28.
I hate when stocks gap down on earnings, personally, but this one's bounced back pretty well. I see the level. I personally don't love it. Just it's kind of like doesn't have much gas down here. It looks like, but we'll see how if it flags out in front of that 28. Keep an eye on it.
Okay. SNBR, sleep number. Through
sleep number. I like this.
Yeah.
What's that weekly look like? Yeah, that's pretty tight. I like this consolidation area here. What do they like to do? 50, 51?
Yeah, that 52 is a decent
I like that.
too.
That's
Yeah.
good. Probably needs more time as well, but in time. All right, keep going.
All right, next WNS.
What do they like this?
65.
It's tough because you'd have to buy it as like a breakout setup because support is down here at 60. So I feel like the best entry is definitely behind us. If you see volume through that 65 area, then maybe. I mean, it showed it wanted to be strong this week.
Mm-hmm.
So, I don't personally love it, but I understand the trade.
Okay.
But I wouldn't take it.
Yeah. Next we got Piton.
Piton, what, through 100?
Buy through all-time highs. Shouts out to T-Fresh, who still has it from 24. So
I got it from like 27 too. He's fucking just flexing on me. And and now that we're here, all these guys in the chat who don't have a percentage next to their name, yourself included, but then they want to play the game when they get that winner. People like us who've been in the game the whole time, they know, okay? they know who's really in it and who's not.
Yeah.
And T-Fresh, if he drops like a 400% one day, like, I don't know. Does it count? I haven't seen him. All right, whatever though. But so I mean, this is a pure momentum trade. This 100. So I'm not buying Peloton up here, but could it go higher? Yes. Mm-hmm. So pick your poison there. I don't want to buy Peloton at 100.
Gotcha. All right, next we got we got stock 300% ago. Yeah, so Cat through 151.
I like it better against this little pivot low at 142.73. Mm-hmm. But in time, that looks okay. I like this like uptrend that's working on here since, what is that, May? So It's kind of just buying in that area of this support area. So looks pretty good. Could be there in time.
Okay, let's see. I'm trying to skip through a few. All right, we got Boeing, a name we haven't talked about in months. Through 172.
No.
All right, Tesla.
Oh my God. Nah, just too wide and sloppy right now.
Yeah. All right, wrapping it up. We got Doc U through.
All right, see all right, Doc U. Here, something I can get down with. What we got here. I was wondering if this was going to be a short as it came down to here. Clearly not, as the buyers came in, and now it's up to this little resistance area. And this is more of a breakout setup to this 217 area. You need some real volume. So that one, some real volume through 217. That docu makes a lot of sense to me.
Mm-hmm. PG 140.
Yeah, that looks good. I like it. That's nice. Here's what we like. I'll give them real quick. So a bull flag is really just a continuation pattern. We see an uptrend. The uptrend stalls, creates a bull flag, and now through 140, it should continue that uptrend.
And then lastly for social media is MU, Micron through 52.
MU, they just had earnings like an hour ago, and I think they were really good. They're gapping down post market. Oh, wow. So I don't really know. It depends on these earnings come out. They're down 4%, so we'll see tomorrow.
Okay. All right, so with that, shape your rest of social media question. If you want, we can get into good trade, bad trade. All right, so we got Joseph Park in his GLPI. He's looking to buy it through 38. We can see that little tight consolidation. Trying to kind of cheat in before that little breakdown. You can set horizontal line. He drew. Again, it broke out, but had no follow-through, break-even stop. He took the trade. Just didn't work. Lost nothing. No harm, no foul. Shake, if you want to go to the next one, LVGO.
Yeah.
All right, so we got LVGO. Again, this
so brutal.
A little base buyback, sport buyback, but again, he gets in one day too early, gets shaken out, and then it goes. Again, that kind of comes with trading. He did give it versed at 120, but unfortunately, just shook him out. So these are
So I feel like a 15-minute rule would have saved him right here.
Yeah, I think so too. So for Joe Park, next time, let us know if that 15-minute rule would have worked for you in that trade. Lastly, I think we got a few for him. MMC is the next one.
All right, so he bought off support, bought a feeler on the way up through 112 after the shakeout. Didn't add today because of the gap up, so I've been very lightly. So he bought the support, kicked some. That's solid. Ideally, you'd kick some off into this 120 area, but that's something to work on. Came back down to that support. Didn't get stopped out. Rebought the hammer. I like that, and now it's on its way back up. So now next time it gets up to that 120, probably kick some again, hold that core. Maybe it breaks again, maybe it pulls back. So this is a good trade. He's trading around the core very well.
Mm-hmm. It seems like if you go from like the prior two trades, like the first one's break even, the second one he got shucking out. It seems like this one where he bought back up off 112, it kind of seems like he gave it that 15 minutes or maybe a little bit longer because it did flush down through, and it gave him that conviction to kind of get back in and then put that break even stop.
Yeah.
And then I think lastly so we got next MRVL.
Nice.
All right. So again, he bought, anticipating that little breakout. He added to it. He has a break-even stop verse 38. Today it had some continuation up into 40.5, that prior high, and it sold off a little bit. So he probably still has that same break-even stop. So it's just kind of working itself out. But I would say he'll probably get stopped out tomorrow.
No, yeah. This is trash. This is the second. All right, so adding too high and fucking up your cost basis, so you have to give this like unreasonable stop. That's really bad. You can never find success if look at this first buy at 37, whatever it is, perfect, and his stop should still be under that low. So then he adds too high, fucked up his cost basis, and now he has to give it to today's low, which it means nothing on the chart really, support and resistance wise. So I think he should take a big lesson out of this adding, and he said it. My mistake in the trade is adding on the gap up from an emotional standpoint. But if I were him, I would treat this as two trades where you get stopped out of this ad stock probably tomorrow, but you want to keep some against this because the name hasn't told you you're wrong, but you're going to get stopped out at a point that's kind of in between support and resistance. So that I would try to rid yourself of that habit if you could, because he had such a great first entry, but the trade's mushed because of the ad. So
yeah, And then lastly for Park, we got this VRSN.
Oh.
So
it's a really nice entry off the support. That's these fucking break-even stops are killing me sometimes.
Yeah. The one thing, like the main glaring thing I think is when you see those with 4 basically like inside days like at support, I feel like you gotta really give it verse that 195. Like that's showing you like clear as day. Like that's the buyers held that 195 clear as day, and your price again, his price 200 is really just his price, where that was the real out. So if he kept it verse at 195, he'd still be in with great stock, and he probably would be able to hold for that 220 breakout in time. So yeah, I think particularly we go through his trades, some good, some bad, but at least he didn't lose money in any of the bad ones. So at least he can make these mistakes, but they're not costly.
I personally think there's a little bad habit starting to form with everyone moving their stop to break even way quickly. Stops should be based off support and resistance. As this is just like a perfect example where it's like the stock came down to a price that it hit 3 days prior, and he got stopped out, and just in the middle of support and resistance, it's like, how are you going to find success if you're never really learning, if you're just moving to break even? Like this the stock's higher and he's stopped out. That was kind of the common theme for all these trades.
Yeah.
It's moving to break even way too quickly. You want to base your stops off support, except like breakout setups and shit like that. But like these are support buys.
Yeah, no, I definitely agree. So that was all Park's ideas. So if you want, Chick, if you have any trades you want to go over, and then I have 2 that I can go over.
All right, I've been working this Pinterest for hot little minute. Let's check it out. Show trades last 7 days. Little 30-minute chart up. All right, so the daily setup we saw on pins was this breakout setup. And all right, so not moving my stop to break even is what is showing me success in this trade. So I bought, you can't see it right now because it only has trades last 7 days. I bought this 38. I kicked into that 42 in that pop. So it comes down. We'll go to the 30-minute chart. So it comes down, and if I move my stop to break even at this 38 or 38.25, I'm out of the trade. But instead, I'm finding the buyers, and the 38 holds. The breakout level holds. That's like the best shit ever. You get to add for such cheap risk. So I added down here, and now I'm just sitting on. I have my full position back, and I'm just kind of sitting with it, hoping it flags out more and takes out these highs. But now I can let it work and do its own thing, where I don't have to, have these kind of weird break-even stops that don't mean anything. I can give it below this 38. I saw 38 buyers hold. If they break, that tells me something has changed. So this FSLY, similar trade, kind of. All right. So I originally got in this FSLY, this 85, and this was a breakout setup. And I'll show you the entry on a 15. So this is the entry. You can see the huge volume. And that's why this was a breakout setup for me. This was one of a few names I was looking at that day. I saw the volume off the open, and that made it the clear winner. I sold some into this 94, 95 area, but held on to a core. So then I see it turn that 85 into new support. So then Friday and Monday, I'm adding because I know that 85 has turned into new support. And then today we got that breakout set up. Again, huge volume off the open. Huge volume off the open. I kicked some into strength. It came back late in the day with the market weakness, but I'm putting myself in a position to make money. I have a relatively big position in this one, and now I'm putting myself in a position to make some serious cash with well-defined outs, with triggers and all that. So that was something I was doing really well. What I was doing shitty, the snow. The snow has my name right now, my number right now. So what I'm doing differently in those names that was so great is I know this snow is so wide, and I'm trying to sneak in. So you see these entries, they're like BS on a time frame. It gaps up. I want it to like hold this like micro support level right here. Try to buy it too tight, and then today off the open, I buy. It starts to tick up on a. The report that confirmed Buffett was in it, and he has 15% of the company now, and blah blah blah. So I get a little bit heavy, and then I hold some stock with a lighter stop to yesterday's low. So I get quickly stopped out of the heavy stock. I still have a very small core, but the difference between these trades, the Pinterest and the Fastly, where I guess they were both a little breakout, but I was seeing the breakout on huge volume be confirmed, and then I would see buyers support new areas where the snow I'm keeping too tight. I'm trying to sneak in because it's such a wide name, and you see like I'm taking these BS losses. So that's kind of the difference there is. I'm trading versus well-defined areas in Pinterest and Fastly, and I'm trying to be way too cute in the snow, and that's what I'm paying for right now. What you got?
All right, so I have two trades. I have a good trade that I lost money in, and then a bad trade that I made money in, and that's a lesson that takes a little bit to learn.
Lennar?
Yeah, so I'll start with Lennar first. So Lennar, again, this is it's purely a breakout trade. I'm looking to take it through 80. The day I got ticked into it, again, it looked bullish engulfing, closed basically at high day, and of course I got ticked in basically at that high day. My buy side was at 80.05, high day was $80.06. So I got ticked in. Now again, we're looking for the breakout. I'm expecting this to continue higher the following day. I'm not expecting this to kind of play around and hold underneath the range. I'm expecting that breakout move. The next day, it opened immediately under that 80.06, could not get a penny above it, and it was like really tight for the first 15 minutes. It was like almost like a dollar range. Now when the real out is verse 74, and I'm not seeing that continuation that next morning that I'm expecting, I don't want to give it that same 6 points when I could be wrong at that point. So I upped the stop versus that 15-minute low. I got stopped out. I lost like 1%. Still stepped back up. Still looks great, and I'm back in it now. But that was like. In my opinion, I thought it was an okay trade. I lost money in it, but I was okay with it because I didn't want to. If I was wrong and the market continued to pull lower, I didn't want to lose the 6 points in Lennar when I was right for barely a penny. Now for the bad trade, this was this WDC. So this was a name that I was looking. Again, we talk about the third time into resistance. We call it third time's the charms when we look for breakout or continuation to happen. And we had this in WDC, very similar with Lennar, where it kind of ticked through 39, just didn't go. Now the problem with this was this did pull back, $3 against me, still held that proper support, and the next day we got some little news with WDC gapped up 10%, and it ran into the gap and was coolly starting to reverse. And this was one where it was like my price just wasn't, I didn't have a good enough price in the name. My price was 39. It was like $1 or $2 in my favor, but I was already risking $3 in the name. And as it started to reverse, I took the small profit, the $1.50 per share. So in my opinion, this was a bad trade, even though I didn't make money. It's just that the overall risk in the trade was much higher than what I made. And this isn't a trade that I can continuously take and make money with because the risk was far greater than the reward that was there. So again, for the good trade, I lost money in it, and I like that trade better than this one that I made money in. I just think it was a bad trade. So those are my main two for the week.
Funny how it works.
Yeah. All right. So with that, Jake, if you want to jump into top ideas.
Surely. You want to start?
Yeah. So again, this one has been on both of the raters. This INSM through 34 and 35 versus this 32 for now. That's been
this one.
You're in it already. All right. So great. So that's
I just have a feeler.
Okay.
If you look at this weekly chart, it's
bananas.
pretty insane.
The other two, we have this MDC through 48 blue sky breakout. This one we tried earlier.
What'd you say? MDC?
MDC, yeah. It's a home builder. Blue Sky Breaker through 48, just been flagging up here. So that one I think looks ready in time. So those are the main two for the week. What about you?
Nice. So there's TAL. Really nice support buy setting up right here. What is this? 75, 30. Strong name, upper level. Looks really good off this. What we got? Let's go. Grocery outlet. My name from back in the day. My Corona name. Just turning a previous resistance area to new support. Looks good through this like 39.50 area. Spotify. The support buy is still setting up here. Looks pretty good. Strong name. What we got? And then last but not least is Team. These software names have been strong. They've been flagging like on the hourly. This is kind of like similar to that DocU. So this Team looks pretty good. Nice little inside day. Watch this 184 area for some continuation. And that's really it. And it all depends on, this market is pretty inflection pointy where, we could fail hard from here or we could pivot and go a lot higher from here. So I think everything's going to really depend on that.
Yeah, no, very true. And again, if you guys still watching this, if you have any stocks or questions you'd like us to go over, just drop a comment below and we'll address it in the next chart talk.
Perfect. All right, on to book of the week.
Let's do it.
Oh, I'd love to start. Bennett, I'm figuratively and literally taking a page out of your book here. You know what my book of the week is?
What's that?
It's your next 5 moves. Patrick Bet David. Oh, it's a fucking classic. Master the Art of Business Strategy. I've been killing this book. The audiobook's really good. Different parts resonated with me than for you, though. I really like chapter 2. It was like they talk about knowing yourself is the most important part of any kind of business or desire or anything like that. And for me and you, where it's like we would be under the category of the most entrepreneurial, where we're gonna give up our whole lives, whatever, to find success. But I have a lot of friends who just aren't like that. They're very comfortable. They just want to live a fun life and things like that. And that's completely okay if that's like in your nature. But you can still maximize your utility, maximize your output. And he goes into a really great deal about like you just kind of have to know yourself and then kind of pick your lane and pick your strategies from there by knowing yourself. There's a lot of great other stuff in here about building teams and kind of how the lie about the single lone entrepreneurial thing. Everyone has help. Everyone has a team. Like the most successful guys have a ton of people helping them, and even trading experts. It's not me and you at this point. There's a ton of other guys who are behind the scenes helping us out. So just a really good business strategy book, as you told us 2 weeks ago. What are you reading over there?
I got Permanent Record. It's Edward Snowden's like autobiography. So I didn't really know much about him, and I thought this book was going to be about like all of the stuff that he exposed, but it was more of like his upbringing and like you got to know a little bit of like what he did. But one of the interesting things I found was when he talks about when he first gets hired for the CIA, where a lot of the employees they get like put into like companies like Dell or Lockheed Bar, and that would be like their cover in a sense. And he goes into his first interview, like to negotiate a salary, and typically government employees don't get paid that well. He goes in and he goes and asks for $50,000, and the recruiter or the manager or whatever says, "How about we'll make it 60?" And Snowden like walks out thinking he's like a genius because he's got like a $10,000 raise like in this like negotiation, and he finds out later where there's the people that work for the CIA and there's like the independent contractors, and the independent contractors are like outside of like the government's payroll. So the government pays these independent contractors, and those contractors get like a 5% like referral fee or kickback in a sense to pay these people. So they had an incentive to give Edward Snowden more, even if he wasn't qualified, because they wanted an extra 5%, like the extra 5% on the extra 10 grand. So he like at the end he goes, I benefit, the company benefits, everyone benefits except for the taxpayer. And like that was like one of his little lines at the end, saying like it was an inefficient process. But it was a pretty good book. But again, it was more of his like life leading up to the events, not after the events as they unfolded. So that was my book.
All right, sounds good.
All right, so I think we wrapped it up. If you're still here,
wrap this thing up.
Drop a thumbs up if you are actually still watching.
Damn, if you made it this far, we should have marketed this beginning. I got my Trading Experts new shirt on. Shit, looks good, huh?
Yeah, I got. You gotta send me a couple now.
Yeah, we'll see. All right, guys. See you guys next week.